Joining me now is Tobin Marcus, head of policy and politics at Wolfe Research. And Tobin, look, for investors, the larger point is it looks like they're going to pass this thing. Now we can move along to the bigger budget fight. Is that right?
Yeah, that's exactly right, Kelly. Normally, from a market perspective, I look at shutdowns primarily as a sentiment issue. They tend to be an overhang heading into shutdown. Sometimes you get a reversal once the shutdown actually starts or gets averted. In this case, I think there are enough other drags on sentiment that I would not expect a lot of relief as a result of this being cleared up, although we are bouncing today. But yeah, this was always, I think, a speed bump on the way to the bigger budget fights ahead.
Do you think today's bounce is because they reversed course and now it looks like, do you think there was maybe a 600-point, shutdown, built into the Dow?
I think it's mostly probably sort of a reaction to the selling that we've seen over the course of the past few days. A little bit of dip buying, but it's possible it's contributing at the margin. I will say in my conversations with institutional investors over the course of the week, there's a little bit of background interest in the shutdown as a possibility, but by far the majority of the focus in the investment community remains on tariffs as a driver.
On tariffs as a driver, for sure. And also in the background is the budget bill that is going to extend or not the tax cuts. And that feels also like the elephant in the room. Yeah,
that's always been by far the largest fiscal thing that Congress is going to have to deal with this year. That was always going to be done on a party line basis. We're still a little bit treading water on that process. Our expectation coming into the year was, we figured the House probably would be able to get their framework for that bill in place prior to heading into the shutdown fight. And then we'd have to take a little bit of a breath because D.C. generally cannot multitask. And so those negotiations will pick back up once we get through this and recess next week. I think April will be the big moment for the House and Senate to try and align on the overall shape of the bill before they get into nailing down the details later this summer.
The process has been relatively smooth so far, even as the tariff process has been quite fraught and the opposite of smooth. How do those two interact?
I don't think they interact that much. There's been a lot of conversation about the tariffs helping to pay for the tax bill. Certainly, that's not what's contemplated by the House budget resolution, the reconciliation instructions that they voted on a few weeks ago. Generally, tariff revenues would not score because they're not done by Congress. So things that the administration is doing separate from the actual bill don't, quote unquote, score for the purposes of paying for it. So I think they'll gesture at the tariff revenue. I think they'll gesture at their hopes for savings from DOGE. It's kind of helping to make the numbers add up. But I think that's mostly a way of explaining the residual between the $2 trillion of actual cuts that they're anticipating, including in that bill, and the $4.5 trillion price tag for the tax cuts.
And how does that square with what we just learned about the deficit through February, which was that it's massive, that the spending was up double digits year on year, revenues were not keeping pace? It's a tough place to be starting from.
Deficits are high and they're going to remain high. Our expectation on deficits is that we will continue chopping sideways in the mid 6% of GDP range on deficits for the foreseeable future, while the debt ticks up and up and up, pushing past 120% of GDP, not too far down the road. There's been a lot of talk about balancing the budget, as Trump mentioned in his State of the Union address. I think Secretary Besson in particular has been talking as if we have a big austerity program underway that's going to get the budget balanced and sort of create a need to detox from government spending. But that's never been what the actual policy mix looks like unless DOGE is able to massively outperform what I think is any realistic expectation for the extent of cuts it's going to deliver right now.